Hi everyone, and welcome to the joint Celent and Xchanging Webinar, which is today asking the question, how can insurance providers develop an agile IT infrastructure, and is cloud the answer? My name is Tom Pigden, and I'll be hosting this webinar. To discuss our topic today, we are joined by Craig Beattie, Senior Analyst at Celent, and Kevin Wells, Head of Infrastructure Management Services Xchanging. Looking at the agenda for today's webinar, Craig will start by discussing the current IT infrastructure landscape in insurance, before focusing on the main drivers forcing insurers to reevaluate and where the cloud can provide an agile answer. Kevin will follow this by looking at the choices of infrastructure available and asks whether agility instead comes from a more flexible model. There will be time at the end of the webinar for questions, and we invite all participants to submit questions they have for Craig and Kevin. You can submit questions using the Q&A option in the WebEx dashboard. Please set the recipients as hosts before sending their messages, and we'll come to them at the end. Once again, thank you for joining us. We hope you enjoyed today's session, and I'll pass it over to Craig to get us started.
Our insurance carriers can simplify and reimagine the IT infrastructure to become an agile enterprise. So we're going to spend a little time on the history of where carriers have come from, a little time on IT infrastructure, and a little time on what agility really means as well. So we're going to start with the current IT infrastructure landscape of insurance carriers. I toyed with the idea of putting a picture in here of spaghetti. I think most people are familiar with the insurance industry, and even some of those who aren't will recognize the many different types of systems that insurers have. Most insurers are old organizations, and some of them, their data centers look a little bit like IT infrastructure museums, quite frankly. But there's some good reasons why that's the case, and there's some challenging drivers, challenging features of IT infrastructure, of applications architecture that's driving that. It's not that the insurers are simply not investing, but rather that they have good reasons for these complex infrastructures. And on this slide, we start to see some of the data behind that, actually. So insurers often have different systems for different lines of business. They have different underwriting systems, different product configuration systems, and different quote and illustration systems. We'll see later in some of the slides that the level of straight-through processing required, the level of flexibility in the product required, the level of digitization in the product as well, can be driving factors in here. As we see on the next slide, there's some good news here as well. There are places, there are components where standardization does take place. The reinsurance systems tend to be standardized across multiple products, claim systems, commission systems, and actually accounting systems as well. These are ones that are peripheral to the rest of the infrastructure. Some insurers have gone through to the extent of making the portal or the web infrastructure, the infrastructure that talks to the client directly, or possibly the intermediary. They've gone to the extent of making that standardized as well, although that, as we can see from the slide here, is rarer, and we'll discuss some of that in a moment as well. We've got to pop onto the next slide. So there are good reasons for having many applications. We've got a couple of charts here, but I'll pull out the key points so you don't have to read through all the text on the screen there. We have multiple systems to meet distribution channel requirements. Now, this is a key thing here, I think, and it's a key factor we'll talk about drivers that are changing insurers' attitudes as well. But a key driver at the moment is this digitization of insurance. Whether you're an intermediary or whether you're a customer, you're now demanding many more ways to interact with an organization, whether it's face-to-face and on the phone, as it has been in years gone by. But now it's increasingly, while I'm traveling and I've got my mobile phone with me, I want to be able to check up on things on my iPad, and I want a different experience, but still a mobile experience there. And maybe I'm using a desktop machine as well, and I want to see a web-based interface there. People are increasingly interacting over social media, their instant messaging. Very interesting world. And that kind of distribution channel, whether it's to a group of brokers, whether it's to a customer, whether it's to a different segment of brokers, that's driving having multiple systems. People are buying things that are pre-integrated rather than trying to have a single standard system and integrating that. Having said that, we can see that there are some insurers out there who have a single global system. On the right-hand side there as well, we've got specific business requirements. Distribution channels, again, a key factor in there. But line of business is also a key factor as well. The requirements in terms of large commercial space, where you're much more likely to be relying on human expertise, on their capability to do the rating, to understand the risk in there, than you are, say, in a motor insurance case, where you're much more relying on straight-through processing, augmenting the data, enriching the data in real time, doing that fraud checking in real time, and getting the answer back in seconds or less than a second in many cases. Those requirements on the IT infrastructure are very, very different. One's about augmenting a human being and enabling them to complete their job, to leverage their expertise, and the other one is very much more around automation, and that drives some distinct requirements in IT infrastructure. Mergers and acquisitions is a key one. As I said, most of these organizations, these old insurers, these carriers, have grown up by consuming each other, and they're made up of different organizations. And for very good reason, most of them cost-related, they will continue to run some of the older systems. They will have multiple applications doing the same thing. You can see that our willingness to make the most of our legacy systems. Insurers are profitable not because they distribute their funds at a whim, but because they're prudent and in many cases risk-averse. And actually replacing a legacy system contributes a significant amount of risk. If it's running, if it still works, if it's doing it at a reasonable cost of policy or whichever metric you wish to go with that, then it might well be that you would keep those around. We'll move on to the next slide, please. Apologies for the delay there. So we've talked a little bit about why there are multiple systems and some of the good reasons why you've got different systems and why there's some complexity in the architecture as well. Here we're talking about digging into that a little bit more in terms of why would you standardize and why would you not standardize? Why would you segment the systems differently? And as I mentioned earlier on, we can see here that this idea of straight-through processing versus what some insurers call non-flow, so non-STP, human interaction, that's a key driver for segmenting the system in different ways, for driving different types of processes. Volume of servicing, that's where you tend to see more standardization, actually, where you're getting the volume of scale, where you're getting the ability or the driving that ability to reuse much more. It's interesting here that there are some differences in the responses here. They don't quite invert, which is intriguing. But basic message. Insurers have complex infrastructures, but with good reason. Some of that might be cost-related. Some of that might be actually they have very different requirements of the infrastructure that they're putting their systems on, whether it be very, very fast response. In an insurance world, it's not quite algo trading or anything like that. But from an insurance point of view, still very high transactions, very high throughput requirements, very high speed requirements, versus other systems where they need not so much speed requirements, but rather they're trying to enable experts within the organization. They're trying to make sure that they get the right good quality responses back to the customer enabling that underwriting resource. Or in some cases, it might be a claims handling resource or other resources within the organization. Actuarial is another good example there. But underwriter is the one I tend to hear about most. So if I move on to the next slide, so there is a desire for a simpler world. Slide 7 now. So what is your priority in segmenting components of your policy administration systems? There's a preference here, a top priority, and 80% of the guys who responded for a preference for a single end-to-end solution. And you can see it repeated here in multiple places, actually. There's an observation that maybe people will segment by geography, they'll segment by line of business, type and size of customer, personal lines versus corporate versus large corporate. There's a desire to standardize those applications. There's a desire to standardize the infrastructure. But the simple fact is, at the moment, insurers who operate multiple lines of business, who operate in different countries, who are trying to keep up with the increasing demands of their customers for more digital channels, they're pressurized, if you like, to deliver this complex, heterogeneous architecture, which drives to multiple skill sets within the organization and is challenging, to say the least. It's challenging to deliver as well. So, moving on to the next slide then. Moving into the main drivers forcing insurers to rethink the way they deal with infrastructure. Certainly an interesting challenge here. So moving to slide 9 then, observation 1. Customers are demanding a different relationship model from their insurers. I won't go through all of the points in here. I think most of them will resonate with you. And this applies to brokers, to intermediaries, as well as customers. There's increasing demand for transparency and simplicity. They want shorter forms, and they want more data out of it, actually. They want to do self-service for simple tasks, but they also want to have complex tools for enabling them to engage in complex decisions as well. And then demanding increasing participation. They want to be kept informed and almost in real time. This is the intermediaries and customers. So, you know, for a commercial insurer, this can be a problem squared, if you like. So I'll not go through all of those, but there's this increasing demand, this pressure to be faster, to be more responsive, to be more interactive, and to have greater visibility of what's happening within a process. The second observation on the next slide there, insurance run on paper for 200 or more years. There are Lloyd's insurers there who are, well, a Lloyd's institution which has been around for centuries. Voice has only really been a very relatively new thing. We've got digital there as being 2 to 4 years, but of course we've seen things sold in, online since the early 90s, well, maybe mid-90s. But the funny thing about that online, e-commerce, e-business, digital, whichever way you rebrand it, it's reinvented itself every 2 to 4 years. Actually, it's morphed from simple brochureware into e-commerce, into sort of B2B e-business. Mobile, it's in tablet, and it's changing quite significantly over time. A very interesting and challenging environment for insurers to keep up with. The idea of simply trying to standardize and then re-standardize and then re-standardize in a response to this, we can start to see why distribution is a great example of why insurers are simply looking for solutions that work and deploying them as quickly as possible simply to keep up. So observation 3, a demand for growth is fueling IT plans. Now this has been a common theme since a couple of years after the financial crisis, where all of the insurers are being driven by growth. Efficiency comes second, not so much cost reduction. So we've got a bit of a being more efficient, being better, rather than being cheap and fragile. But looking at growth as the key driver. Now, the key challenge there for any insurer is in order to grow in most markets, they have to take a business away from their competitors. They have to operate faster, in a more agile way, respond quicker to the market than their competitors. And a lot of that today means having digital channels, whether it's engaging with brokers differently, whether it's engaging with customers differently. However you choose to do that distribution, it means that you're looking at adding new distribution channels faster than your competitors, but also delivering those distribution channels quicker, or at least on par with your competitors in order to get that growth. And here's the key slide for me, observation 4. Current technology is not generally well aligned to the business objectives. So we asked insurers, and actually these were commercial insurers, but I believe the same response comes back from the personal lines guys as well. If you measure these different tasks by speed, which ones are you quickest at? So faster is at the top there, and then the importance of these tasks and differentiating the insurer to the right. We can see that the top 3 tasks that are important for differentiating an insurer, so adopting a new model for quoting and pricing, making a change to business processes, product change and enhancement, these are the core things that the respondents to our survey said would differentiate them against a competitor. They're also the activities that actually the insurer is slowest at and least able to deliver on in terms of speed. So we've got a huge set of challenging environments for the insurer. They've been around for centuries. There are startups, but I'm characterizing the majority of insurers who have been around for a long time, have made repeated investments in technology, and what we're increasingly finding is increasing demand to deploy new channels, new ways of doing business, new ways of engaging with intermediaries, and sometimes it can be just adopting a new standard. Sometimes it's about getting an extranet out there and getting the right products on there. But actually, insurers are challenged with the core things that allow them to differentiate in their marketplace. So, is cloud the answer? An interesting question here. I'm going to take an awkward response in terms of, I'm a consultant, so I have to say it depends. But I think cloud points us towards the direction of the answer. Actually, it gives us a view of agility that's quite different. So moving on to the slide. What I wanted to do here was compare delivering IT in 2000 versus today on slide 14 here. So an IT operations perspective. So back in 2000, I joined a startup. It was an insurance startup, although it just happened to be selling cars online. To be quite an interesting proposition for an insurer. So back then we were building a 3-tier architecture, which is quite common now, and it was quite difficult. Just building the web server was a tricky task. So if we move on a couple of slides, we can go through those steps. Just wait for the slides to catch up with me. So we can see here that the first task is ordering a machine, and this would take some period of time, actually. This could be certainly days, maybe weeks or months in advance. It was on the critical path back then in 2000. The next step was to install the operating system and apply the patches, actually. And then, once you got that up to scratch, you were doing the security hardening around it. These were difficult tasks. You needed a good Unix sysadmin, probably a team of guys with expertise across different systems to get this far in the process. And then you got to install your supporting applications. So if you're deploying a JEE application, you've got to install the Java virtual machine for a start. You've got to install the JEE packages, maybe your application server and that sort of thing. And that might require some patches as well. And you need to make sure that your security hardening hasn't broken anything that's in there, and you've got to get the dependencies right. And then you deploy your code, your software onto it, and then you can finally run the system. So this was something that was very much on the critical path to delivery. Now, if I look at some of a few insurers are doing this, but if we look at some of the web companies and the large-scale companies, they're doing something quite different, actually. They can now take those first 3 steps, ordering the machine, the operating system, and applying the patches, and provision a virtual machine directly out of the cloud. And that can be achieved in minutes, if not quicker, with a known operating system state and a known patch level state. We can then, using a variety of tools that are available out there, automatically configure the machine. So we can apply the security hardening, we can get the services that we want running on it, we can calculate the dependencies and make sure we install them in the right order, and we can turn, most importantly from a security hardening point of view, we can turn off the services we don't need actually in there. And then we can automatically deploy the code or software. So we can get a machine all the way from having nothing in play, all the way up to having your code, your software up and running on that machine and configured in a known state in next to no time. And then if we go on and have a look at the N-tier architectures, the complexity is increased here. We've got this across web servers, database servers, and application servers. And after we've deployed all of these things, we're looking at joining up the network, plugging the machines together, and then hardening the network as well. And actually all of this, as we build through the slide, can be done in an automated fashion today using the cloud. So this gives us a very different approach to delivering IT operations. First of all, it takes the delivery of the systems and getting the systems in a good state. It takes it straight off of the critical path for achieving a business project. It means that focus can be given to what should the application be doing. It requires a significant amount of investment in making sure that the automation is in place, but it gives us a different way of thinking about infrastructure. For insurers today, with that complex, necessarily heterogeneous environment that we were talking about earlier on, they have a great challenge in terms of maintaining all of those skill sets, remembering, usually in people, all of those configurations of those different environments in order to run that complex, and again, necessarily complex, right? There are good business decisions. Why this is complex? They have to maintain all of those people in order to deliver that complex environment. So we move on to the next slide. Cloud changes the way that we build and deliver software, actually. So if it's hard to commission infrastructure, we're talking about a monolith here, and it's hard to do the integration testing, you build one big application. You have to build everything in one place, because actually you're going to deliver the infrastructure once, you're going to do the testing once, and you need to make sure it all works. What we've seen increasingly, particularly in applications for insurance core systems, but in other areas of the world as well, as you start to move into the sort of new style of thinking, you get into a world of lots of components. You start to nail integration testing, then you can componentize the system. If it's quick to test, if it's quick to put this infrastructure together, actually you can start splitting up the system, delivering things in more chunks, and actually get more parallelism in the delivery process. And then finally, if deployment is easy, you end up with, it's easy, you'll end up with lots of systems. If it takes you minutes to deploy an n-tier architecture or to deploy a simple system with a database at the back of it, then you can start to deploy lots of those, actually. You can start to build out these infrastructures. And actually what we've seen with the likes of the massive scale organizations like Google, like Netflix and that sort of thing, they're moving to microservices-based architecture where if they need to spin up something in terms of the recommendation engine, for instance, whether it's for Amazon and shopping or Netflix and TV shows or whatever it is, they will just scale out that particular component on lots and lots of infrastructure if there's a heavy demand for it. And they can do that independently of the other components in there. So it enables a significant amount of agility in terms of how they deliver the services. So if I move on to almost my penultimate slide, is cloud the answer? And we'll move on to the answer there. Cloud isn't for everyone. We've got a whole load of charts that show that some insurers in different territories, more so in North America than EMEA, but even in EMEA, insurers are investing. It's still not the majority of insurers who are investing directly in cloud. So cloud maybe isn't for everyone, but there is value for all of the insurers in cloud thinking, and thinking about the level of automation, the level of delivery speed, that agility, that flexibility that comes with thinking about your current infrastructure and looking for opportunities to describe the infrastructure in software, describe it in repeatable, automated processes that make so the applications architecture and the IT infrastructure perhaps isn't simpler when you look at it up and running, but actually when you want to bring it down and bring it back up, it's a considerably easier task. It's one that's more agile. It's one that allows and enables the carrier to be flexible in how they adopt new infrastructure and also how they react to changes and requirements, whether it be mergers and acquisitions, bringing on new services from a third party, whether it be responding to the requirements of a new channel in another country. Perhaps the insurers in Poland and suddenly price comparison websites are a significant channel for them. How are they going to scale up the rating capability, etc.? Maybe in another country, let's take Germany, they're selling commercial insurance, and new standards are put in place. How are they going to engage with the distribution infrastructure using that new standard? How are they going to scale that up and bring that on board as quickly as possible and react as it changes as well? So perhaps cloud itself and the adoption of cloud isn't for everyone, but I think cloud thinking differently about infrastructure, thinking pragmatically about where this could benefit you as a carrier, that is the greatest benefit. And now I'll hand over to Kevin after going through my slides there, and look forward to speaking to you all later on and seeing the Q&A.
Thanks very much, Craig. Kevin, over to you to talk about how flexibility provides the necessary agility.
Thanks, Tom. Thanks, Craig. So I'm going to talk about the evolution of infrastructure. And if we look back to the 1980s, when I started in IT, a long time ago, the world was dominated by mainframes and mini-computers. And this probably started in the 60s and rolled right through to the 90s. In fact, many of these platforms are still available today, and many companies still operate them. It provided a highly stable environment. It was expensive. And very people-intensive in terms of operation. And it was relatively difficult to change, so the change cycle on this platform was pretty slow. And engineers had to pre-configure all of the failure scenarios into the system so that the system knew in advance what it should do in certain events. So it was quite restrictive and as I say, a very costly model of operation. And then during the 90s and into the 2000s, we obviously saw the demand change into a more client server model with a distributed computing base. And this allowed companies to operate slightly more agile in that they could operate in a more granular fashion, and they could also spend in a more granular fashion. And so it looks like it was a relatively cheaper and faster way of developing IT. The reality, though, is as this grew, and particularly during the late 90s with the surge in internet-based applications at that time, is it became a very inefficient way to operate. And it wasn't really until the early 2000s and some of the virtualization technologies came in that it became more sensible. So still relatively expensive, still relatively slow to change, and on a scale, very difficult to manage. And it also had very little in terms of self-healing. So I talked about in the mainframe world where everything was pre-configured. In this world, again, there's still quite a lot of pre-configuration. And in fact, probably the only thing that had any capability in terms of self-healing was the network when TCP/IP was introduced. So I'm going to move on and now talk about cloud and how cloud, in my view, has changed the world. So cloud really, for the first time, brings true agility, true scalability, and in an automated and standardized way. And we heard Craig talk about some of the benefits of that to insurers. The ability to rapidly react to situations, whether it's an M&A scenario or just getting some differentiating product out to the market quicker than the others. In the cloud, things are software defined. You don't need to deploy heavy loads of kit and wait for orders to complete and then for people to install it and configure it. Everything can be largely configured in software real time. And it's an instant gratification thing. Servers can be spun up very, very quickly. So in my mainframe days, it probably took us a month or so to actually install a new mainframe. In the client-server world, you were still talking about weeks, and Craig talks about that in his N-tier model. Now today in the cloud, we're literally talking minutes to hours to deploy some fairly large-scale infrastructure. Cloud also offers the opportunity to move to an OpEx space as opposed to this huge capital-intensive operation. And increasingly, it offers a more transparent insight into the way you're spending money. So every component that you use is individually billed. Now, to be fair, some cloud providers do make this a little difficult to see, and they hide certain charges away, which you only see once you're already buried into it. So many of the cloud providers today charge for individual IOs to data. And you can imagine how many IOs you do to data. And every time you move a piece of data, you're going to incur a charge. So how do insurance companies adapt to this world? And I think what's needed is a more flexible model, more flexible approach that encompasses all of the requirements of an insurer. So in terms of the cloud, we've got the ability to use third-party cloud providers such as Azure, AWS, and SoftLayer. They're probably the biggest three out there. And we can choose to use it either in form of pure infrastructure, where we still do the configuration, or the insurer does that configuration, or we can buy a platform as a service or a software as a service solution, in which case you're sort of renting some time on an application or a database. And essentially, you're getting the benefit of the economy of scale of that provider. And the fact that it's pre-built or very easy to spin up means this rapid ability to react. The issue, though, in this world is there's no standards. So Amazon do their own thing in their own way, SoftLayer do it in a different way, Azure do it in another way. And if you've got an in-house virtualized infrastructure, you probably do it in a different way as well, depending on the underlying technology you've deployed. And so, in my view, you need some sort of wrapper that surrounds these different services to try and extract some commonality and perhaps develop a common service catalog that allows you, through APIs, to drive the various different supplies and allow you to move between one supplier to another, or in the sort of multi-cloud environment where you can expand across multiple cloud environments depending on your needs. But of course, behind all this is a heavy need for automation. And I guess I'm going to talk a little bit about public and private first, just to get that out of the way. So most people have heard the terms public-private. Other people in the industry talk about plastic versus platinum. If you think of the public internet being that plastic solution, it's largely pre-configured, It tends to be relatively low cost. It limits some of your choices, and it may have restrictions in the T's and C's. So, for instance, if you're taking out, say, an Amazon service in their public cloud, you're restricted to a 30 to 60-day termination clause, which may be a little restrictive if you're trying to run a production service, but might be perfectly okay if you're running up some development or a test system, for instance. Private, on the other hand, is the Platinum service. You get all the features of the public service, but you get a little more choice and a little more control over how you deploy that. And most cloud providers do offer both flavours of this. And so, generally for production systems, where you might need a longer T's and C's, so a termination clause that is measured in years, that gives you time to react to such termination events, would lend itself more to the private space. Now, as Craig said, most insurers weren't born yesterday. They were evolved over many, many years through acquisition and have been left with legacy infrastructures that are still running important and core platforms of their business. And it's expensive to change from that world. And so you need something that allows you to still operate in that world, get some of the benefits of the cloud thinking. So in my company, we are now driving through automation that we developed in our cloud business into our traditional IT services. And that's already reaping benefits in terms of the server builds now take exactly the same time whether we develop in our own data centers or in the cloud. And I think the other thing that's really key from an automation point of view is the consistency of the result you get. It means it works first time. There's none of this long diagnostic thing that goes on after you build the server when it doesn't quite work the way you expected. And we can actually extend that templating so that it covers a far wider range of automation. So right through from just provision of infrastructure, but as Craig alluded to, that full deployment of an application, providing all the tiers of the application and then essentially preparing it ready for a testing phase. And I mentioned security earlier. That's absolutely key, particularly in the regulated business areas, and insurance obviously is strongly regulated and becoming increasingly regulated to the same levels of banks, and that requires a certain assurance of what you're doing inside the cloud or inside your data center, and an ability to control the data and know what's happening to it. And so within that sort of service wrapper effect, you still need some of the traditional ISO standards that protect you within that world. And you also need some of the technical solutions that protect that data. So, from encryption of data through to denial of service services that prevent your web service being taken down. Through to simpler things such as antivirus and even a security operations center to do proactive security monitoring and be able to react swiftly to events as they occur. And so we come to the hybrid or multi-cloud option, where you've got essentially a mixture of your traditional IT, your cloud, which may be multiple clouds from different providers, and you need something that really wraps that together with a common management approach. And that requires things like web portals to access it, using APIs to actually control it, tools that give you a common pane of glass to monitor and review the service that you're delivering, along with these automation frameworks that I talked about, this templating or blueprinting of applications. And then finally, you need the dashboard capability to monitor how those services are being delivered, and ideally, as much as possible, in a common fashion. So, I guess in essence, what we're talking about is simplification. And simplification to me is all about some of the things Craig referred to earlier. It's about standardizing your environment. It's about automating it as much as possible, and then going in with the simplest possible configurations, taking complexity out of your solutions. And with that leads to genuine agility, the ability to react very rapidly to events, as I mentioned earlier. And it also leads to a lower cost of operation. The ability to spin things up quickly and consistently means you don't have all those failures to deal with and the cost associated with those. And then finally, I guess it's the transparency. IT in the past has been seen probably as one giant bucket of cash that just gets eaten away every year, and it's difficult sometimes to relate that to the value that you get from it. With the cloud solutions, it allows that transparency. You can see every unit that you're consuming and relate that directly to the business that's using it. And then we talk about another feature of cloud. So there's the ability to auto-scale. So if you were doing this in your own enterprise, this would be quite a costly investment. But if we take a typical server, this one we're going to say has got a seasonal workload, and you could either use something like Solvency II, or you could say something like University Admissions website that is very intensive during certain periods of the year. It's limited in this case to one CPU. It can't grow. It's hard configured that way. It's under pressure at a certain point. At some point, it's building queues, and then it stops responding, and finally the website crashes. It requires an engineer then to get involved. There's downtime, customers are disappointed, there's reputational damage potentially, and as well as loss of business, there's the cost to actually try and get yourself out of this problem to recover the situation. With auto-scaling, which is a feature of cloud services, you can actually configure just with a tick in a box to allow your server to either scale horizontally, i.e. create other server images, or vertically by adding additional CPU resource or memory into the existing server. And therefore the server can grow dynamically as demand hits it, and then shrink back as the demand slackens off. And to give you an example of that, if you had a web service, you'd probably use the horizontal scaling to allow that to scale out with multiple servers. And at the back end, you've got some big database server that you actually just want to add additional CPU compute, and that would use vertical scaling. And as a real-world example in the insurance industry that we've actually implemented for one of our customers is the Solvency II application, which is a portfolio risk assessment. It's used periodically during the year. It's a high-cost implementation traditionally because it needs a lot of compute power to do the processing, but it runs for a very short period. But the cost, though, is embedded in having all that infrastructure lying there all year waiting for those few weeks of the year that you're actually going to use it. Cloud allows you to use this elastic compute, the ability to scale automatically I showed you previously, and actually to shut services down that you're not using. So when you don't use them, you still pay a small charge, but it's not the same level of cost as a production server. And then when you want to spin it up, you activate it, and it can be activated literally within minutes, and you've got all the compute power you need to complete the risk assessment. And for this particular customer, it saw nearly a 50% compute cost reduction. And on that note, I'm going to end my piece of the presentation and open it up to Q&A, Tom.
No problem. So thanks very much, Craig and Kevin. We're taking questions now. So if you do have anything you'd like to ask either of the speakers today, as I mentioned before, if you go to the Q&A section in your WebEx dashboard, you can set your recipients to host, and basically I'll put it to the speakers and we can go through with some of the questions. Craig, I think it'd be good for you to start first and kind of look at how you see the niches within insurance really differ from that of your standard client.
That's an interesting one. The niches in terms of particular types of insurer who are trying to achieve particular things. One of the places where we're seeing cloud adoption highest in insurance is actually with the startup community. So people who have a strong base maybe in underwriting, maybe they're very, very good at underwriting. They create a new insurer, perhaps outsource some of the claims, but they need an IT system in order to run, and they need multiple systems in order to reach those different digital channels that I spoke about. And actually, they're looking to the cloud for that. They're looking for they don't want to invest a significant amount of money up front. We haven't talked about capital expenditure versus operational expenditure, but that model of being able to ramp up as demand increases and even ramp down if demand decreases or if they need to change the way that they're delivering the product is very, very appealing in the startup space. We're starting to see very digital insurers leveraging bits of the cloud for parts of the infrastructure, if you like. So scaling those things that need to be scaled. And the example Kevin gave of Solvency II scaling, actuarial analysis, modeling around capital. Those are great examples of places where you don't need that infrastructure lying around all of the time, but when you do need it, you really need it. It's a great example of a niche where this applies.
Yeah, I'd add to that, Craig, and I think insurers, I guess, are like no other business in general, in that they have some of the same requirements. I think there's a increased regulation on them, and therefore that they would need some assurance around that from the cloud provider. But I think in terms of usage, using it for creating differentiation or something you need to get out to the market rapidly with a relatively low cost is the key, and the ability to withdraw that fairly rapidly, again with minimal pain, if it's either finished or wasn't successful as you liked. So I think the startup example is good. I think also insurers can use cloud facilities for things like development and testing, secondary systems that are not critical to their business, or that are trying to get them, as I say, a niche into new business or a new differentiation.
Yeah, I was just going to say, I mean, insurers are often, it's interesting that the two questions are coming up at the same time, but they're often asking, how do I innovate? So with innovation, you need to have a low cost of failure if you're doing true innovation. And cloud can play a great role there as well in terms of spinning something up, testing the market, see if you get the response you're expecting, and if you didn't, then you can wind it all down.
Yeah.
So second question, obviously we've covered off in some terms of startups and digital insurers, but more traditional insurers in areas such as life or health or casualty, specialty lines. Do you see growth as the main drive for people reevaluating their cloud infrastructure? Craig, if you'd like to go first.
Sure. It's a particular challenge, isn't it? So certainly for the P&C insurers, we're seeing growth as being a key driver. Life annuities, pensions companies have come under much greater scrutiny in the developed markets recently in terms of regulation. Just being able to respond to the speed of regulatory change is a massive challenge for those guys, and being able to continue to operate their business in an environment where the returns on investment are quite so low is again a significant challenge. They need to become much more efficient, they're much more cost sensitive now, but they still need to maintain that flexibility and agility. So breaking that trade-off of not spending more money on infrastructure while at the same time being more flexible with it, huge challenge there, huge challenge. And of course, the insurers in those markets are still trying to grow as well. And they face all of the challenges that we talked about in terms of more distribution channels, needing to get more kinds of products to engage independent financial advisors and operate in the market quite differently. So a slightly different mix of drivers, but growth is certainly in the mix.
Fantastic, thanks. And a question to Kevin. So where should I start from cloud if I haven't done anything yet?
So I guess in our world, we started initially by creating a cloud internally. So we had our own virtual infrastructure and portals. And I would definitely not recommend going down that route. That was probably okay when we started it 5 years ago. But now it's very much moved on. And I would certainly try looking at moving some of your development, your less critical systems into cloud, and maybe try some of that differentiation piece. So if you've got something that you want to experiment with, cloud is ideal for that as a very low cost and protected environment. The other thing I'd probably caution people to be aware of is if you've got specific data requirements, i.e. data has to reside in a particular country, you need to be aware of that and make sure that your provider can ensure that that is protected and not moved about.
Thanks. And now on for Craig, that kind of looks a little bit further forward. We've covered how cloud may or may not be the answer, but perhaps cloud thinking is driving it forward. What comes after cloud? What do we see next in infrastructure? Is there a new direction that insurers are looking at and really want to gain the most value from when it comes to their infrastructure?
Oh, well, that's an interesting question. Let me just get my crystal ball out. There have been people who've been talking for the last 5 years, perhaps, about what's the role of the chief information officer in a cloud world. Observing that you don't get chief electricity officers now, that you can just plug devices into the wall and flick a switch and they work. So I think there's an interesting world. At the moment, what seems to be happening with digital, with cloud, is we're taking the way that businesses operate today and digitizing and automating what happens today. Perhaps the real change will come when people start to rethink what's possible about the business model around insurance. Having said that, people are going to need insurance. Insurance is one of those financial products that enable businesses to run, that allow families to have some certainty that should the worst happen, then their loved ones will be cared for. So it's something that's going to be around for some time. I think right now it's difficult to predict exactly what the impact of cloud is. I think that there is a phase of disruption coming. There's some concern coming. At the moment, it's not changed the applications that you buy. It's not changed the way they're constructed. We're seeing in some of the massive scale organizations, I mentioned Netflix and Amazon and even Apple to a degree, looking at how they reorganize their applications into microservices, and they can scale different pieces of functionality independently of each other. And that might be something that we'll see translate into the insurance industry in the fullness of time. For now, though, I think we take a pragmatic approach. There's an opportunity here to do many of the things we've talked about in terms of reducing costs, becoming more efficient, delivering better value not only for your policyholders but also for the shareholders as well, through many of these tasks, and maybe still operating the kinds of things that we're doing at the minute, but doing it in a way that we can be more certain about being able to recreate the infrastructure and scale that infrastructure in a known way. So where is it headed? It's hard to predict. I think in the fullness of time, so we're probably talking 5 to 10 years, we'll start to see more microservices kind of architectures coming into the insurance industry. We'll start to see people leveraging that auto-scaling much more than they are today, but still probably largely doing the kinds of business that they're doing now. And then looking beyond that, well, I'd really need the crystal ball. One thing I would say on that, it's worth playing with some of these technologies now. It's not particularly expensive to get engaged with the cloud, and there are applications which Kevin's mentioned, and I'm sure you can help with, where people could start to dip the toe in and start to learn what these technologies mean and start to think about what could this mean for our business and how can we better serve our customers.
Yeah, and on those lines, actually, Kevin, we have a question specifically regarding one of these sorts of tools. We've got open source tools in the cloud, and if someone is interested in going for it because of the opportunity to balance their costs, they can be quite concerned about support. How do you kind of balance or reconcile those problems? Yeah,
I guess that is the challenge with using open source. So it means that there is no one else to go to in most cases, and you are wholly responsible for the thing that you're running. I mean, we work with people that have got a totally open source cloud. They work in partnership with some of the developers. They tend to use some of the more mainstream open source routines to provide it. And that way, if you're picking open source products and technologies that are used by the majority of people, there is some level of assurance that it's going to continue and be maintained. But there is no doubt about it, it's still a relatively risky proposition if you're doing it on large scale and wanting to completely convert your organisation to it. As opposed to the non-open source world where you've got a supplier who develops that product and you can get someone to help you resolve any issues that you might come across.
Super. Well, thanks very much. I think we've had a bit of the past, present and future, so I think we can probably wrap it up there. Thank you very much, Craig and Kevin, for speaking, and thank you everyone for listening today and providing some questions. We'll be in touch shortly to get your opinion on the session and to provide some follow-up information. So thanks very much everyone and have a good day.